Hey, what's up, folks? Welcome back to the channel. So after a long wait, I'm now finally doing a video on real estate and buying a house. This is going to be the basics of home buying, and it's just going to be a simple general discussion. Before I get into it, some quick notes on my last couple of videos. So obviously I've learned that there are more fans of black swans than there are of compound interest. However, compound interest, if you watched my last video, it's a very important subject, and it's something that you should really be interested in. If not now, before it's too late, you should definitely learn about it and get interested in it. It may seem boring, but it can do wonders for your finances. So with that being said, I'm coming back to you today in typical finance guru attire, and I want to discuss the basics of real estate and buying a house. A lot of people say that they'll never be able to own a house. And when I hear that, I say, why would anybody think that? There's so many options as far as owning a house. You have, first of all, you can pay cash for a house, which a very small percentage of people do. Or, like most people, you end up getting a mortgage for a house. And there are many different types of mortgages. There's a 30-year mortgage, 15-year, 10-year, and they can either be conventional or FHA loans. Conventional loans typically require a higher percentage down and a better credit rating and a better credit history. So some credit ties into this. Like when I got my first place, I didn't understand that not having a long established credit history would actually hurt you in the home buying process. I thought having a paycheck, having a salary, and having some savings would be a good thing. But actually, I needed to have more established credit history and a deeper credit profile. So typically, those who don't have higher savings and a really superb credit rating may end up getting an FHA loan versus a conventional loan. Now, FHA loans are done by the Federal Housing Administration. And typically, your percentages down are much lower than they are with a conventional loan. Conventional loans, typically, you may put up to 20% down or more if you want to. The idea behind conventional loans, which used to be, I guess, more conventional in the past, is that you would have more skin in the game as a home buyer. So with FHA loans, the minimum, I believe, is 3% down. So keeping in mind a 3% down payment as the minimum requirement, I often wonder, why do people think that they'll never own a house? I mean, home prices are going up significantly, especially over the last couple of years. And I've explained some of the drivers of that in my other videos, particularly the interest rates staying lower and lower, are being driven lower and lower by the Fed. That's really propagated the increase and continued appreciation in home prices, which many people feel like it's not affordable. But what's the alternative? Renting, right? And rents are going up too. So the basics, I've mentioned either cash buying or financing via a mortgage, which most people end up doing. And you have FHA and conventional loans. Now, one rule of thumb I like to follow when making a mortgage payment is first of all, get the lowest rate possible that you can get. And as I mentioned, rates are getting lower and lower over time, especially over the last 2 years. You can get rates below 3% now, which is phenomenal. I mean, going back to the 80s, rates used to be easily in the double digits, as high as 15%. And they're based on something called the Fed funds rate, which is essentially the base interest rate of the economy. But over the last 10 years, 10 to 15 years, rates have been falling consistently, and they've really fallen since the Fed has been pumping more money into the economy and lowering the base interest rate through what they do. And that's given us these amazingly low interest rates, which have funneled more home buying, which has caused the housing market to appreciate further and further. And the housing market has really been red hot this year. And at some point, some wonder whether there's going to be another crash or if there's just going to be a slowdown. I think there will just be a slowdown, not necessarily another crash. So I would advise anyone waiting to buy a house, try to find a deal. The deals aren't as good as they were maybe 5 years ago, but if you're patient and methodical and you do your research, you can find a decent deal and not necessarily pay top dollar. But I would advise not waiting on a crash to come. And then as far as making your payments, I always advise to try to pay as much principal as you can, because if you look at my last video on compound interest, when you're paying a mortgage, you're essentially paying compound interest to the lender. So that rate of, say, 3%, you're paying that every year. And there's something called an amortization schedule, which we'll get into in another video. I want to keep this as basic as possible for today. But you want to, if you can do extra principal payments, it will lower your principal balance faster. And in my mind, I like to see people pay off their house as soon as possible. That's what I'm trying to do, and that's what I advise everyone to do. It's a very financially sound decision. So if you can do another $100 on top of your mortgage payment, or $150, or even just $50, every little bit helps. But I would say try to get the lowest rate possible, and I would say credit unions usually offer really good rates. So you want to try to go with one of those, but shop around. Look around. There's sites like LendingTree. There's different sites like Bankrate. There's a lot of resources out there you can use to find the best rate. And housing ends up being, especially for the middle class, it ends up being very often our biggest asset in the middle class. So it's definitely an important financial component, especially for the middle class. And where you live is central to your whole life. And it's always better to own versus rent. And another thing about FHA loans, the key difference between FHA and conventional, besides the 20% down versus the 3%, is that you pay mortgage insurance. You pay what's called PMI, private mortgage insurance, which actually insures the bank against your potential default, and you, the customer, get to pay that. So I know that's seems kind of crazy, but it is what it is. So you have PMI, and you have a mortgage insurance premium that's paid as part of the closing costs when you close on your loan, and then you have PMI payments that you pay as part of your mortgage payment. And then you have certain items like property taxes, HOA payments, and homeowners insurance, which is required if you have a mortgage. And some people include those in what's called an escrow account, whereas others choose to save up and pay those separately. I think it's better, like for me, I like to just pay those separately and have a lower monthly payment, or have more money to pay towards principal as much as I can, because again, paying that principal off faster is a lot better. And again, housing is one of the most important decisions that you'll probably make in your life. Where to live, what loan. And another thing, you'll probably refinance more than once. If you live in one place for a long time, you could easily have more than one mortgage. You could easily have your mortgage dumped off to another firm. That happens a lot, especially with bigger companies, bigger banks. They tend to dump off a portion of their mortgage profile to other lenders, so that they can use that money to lend out to new buyers. One thing I would advise also is not to get a home equity loan. A lot of times, lenders will send you offers for home equity loans to make a brand new kitchen repair, things like that. That's actually why I chose to do the video in my kitchen, because I'm happy with mine. I don't need any home equity loans to finance any new kitchen repairs. The house comes with nice kitchen stuff anyway, nice cabinets, nice granite countertops, and good appliances. So, like I've said in prior videos, you want to stay as much out of debt as possible. So you don't want to take on a home equity loan to pay for stuff you don't need. It's just not a financially sound decision. So with that, I wanted to give you some basics on home buying. Hopefully that was helpful. There will be many more videos to come on that, and we're going to talk much more about it in depth. I'll get into amortization. I'll get into mortgage payoffs. I'll get into closing costs. I'll get into the whole process because it's all part of finances. So I've been really wanting to do a video like this for a while, and I've had questions about things like this. So that's why I really wanted to get a video like this out. So with that, that's a general intro. Please remember to like, comment, and especially subscribe. And also, I'm going to try to do more videos on topics that are trending in the news, because I noticed the Black Swan topic did better than other videos have done, and because I seemed to hit a topic that happened to be trending that day. So I'm going to try to do that. I may do a video on the supply crisis that's going on, and look for that in the next couple days. And with that, thanks for tuning in. Hope you have a good rest of your day, and keep an eye out for my next videos. Thanks.